Okay, we are halfway through the year and today is also my birthday. I've turned 29, so by the time you watch this, hopefully I'll be a couple of pints of Guinness in, because looking outside, it's lovely weather and it is of course a lovely day for a pint of Guinness. But as we are exactly halfway through the year, I thought it'd be a good time to show you my entire portfolio, how it's performing, all the accounts I use and everything that I invest into transparently. One more quick thing before we start. If you are not where you want to be with your investments, we're now halfway through the year, you're still struggling, you haven't even started, you haven't taken control of your workplace pensions, then check the first link in the description as I bang the table there. I'm absolutely buzzing and I've created the Investing Academy. There's limited spots because there's ongoing one-on-one support. There's loads of stuff, as much stuff as I could pack in there. It starts in 12 days and yeah, spots are limited. So that's you. Click the first link in the description, give it a quick read and I'd love to help you out. These on screen are my total portfolio numbers. I'm just shy of £200,000, which feels absolutely mental. Of course, this hasn't been built up overnight. It's been 9 years in the making now. But the important thing I wanted to point out here is you can see the contributions from my own pocket, from my own money, is less than half of that. I've taken full advantage of free money, mainly through employer match workplace pension contributions, as I've been working now for years, and also gains. 9 years is a relatively long time to be invested for, or I guess medium term. I'd say 10 years is technically long term, but it's a decent amount of time to be invested for. There's been some great gains from the market, and of course you have to be in it to win it. And the gains are over £70,000 in my investment portfolio, which is absolutely insane. Where have those gains come from? Well, on this graphic now, you can see that the large majority of my money is in global index funds and ETFs. Probably not exactly a shock horror moment. I essentially bang on about them every single week on here. But yeah, most of my money is in global funds with a little bit of crypto, and I'll show you all those investments as we go through my accounts one by one. The last chart I wanted to show you before we get into the accounts is this performance year to date. And you can see it has actually been quite a volatile year, particularly in March when the US-Iran war started. In that month, I was down around £10,000. However, as the market always seems to do these days, it bounced back almost quicker than ever, and now I've gone on to make £10,000 in gains this year alone. And I definitely have noticed now my portfolio is at a larger value, these swings are much more wild in absolute terms. Even if the percentage terms are only a few percent, it can cause a massive change in the absolute pound amount that I gain or lose. Now, of course, there is dips, corrections along the way. There might be a big crash coming, no one knows, but I'm not going to change anything. I'm going to keep going every single month with this exact investing approach, because ultimately my investments are in line with my risk tolerance, and all of this is for the long term. I doubt I'll touch any of this for 20 years. I'm getting up close and personal now as I take you into my laptop, and we're going to go through my accounts one by one, starting with the largest one, my Vanguard UK account. Of course, the most important thing to point out now before we go through all the specific investments is, of course, I'm not a financial advisor. With investing, your capital is at risk, and this is all past performance, which is no indicator of future returns. This is just what I do personally because it works for me best. Of course, always do your own research when it comes to your own investments. There's actually been some pretty big updates as well. Better ISA, new stocks and shares ISA. I'm going to explain it all as we go through. But first of all, we have my Vanguard stocks and shares ISA, as you can see on screen. This is actually the new layout. I think when I click it, it's going to take me into the old layout. Vanguard UK is still very clunky. The mobile app is pretty useless, which counterintuitively, I actually think that's a good thing for a long-term investor, because you're less likely to get sucked in to buying and selling. But I know most people do think that's a drawback. This is my stocks and shares ISA, and the amazing thing with this account is that I've not put a penny in here since the start of 2023. If I actually click into my investments, probably unsurprising, all of my money is in one fund, the FTSE Global All Cap, and the gains have been great. I've been using this fund essentially from end of 2018, start of 2019. I started with £100 per month. I increased that amount per month as my salary went up over time, and I essentially invested as much as I could into this every month up until the start of 2023, and at my peak I was doing £650 per month. Just to prove that, you can see I've not put any money in here over the last 3 years. Over the last 5 years now, if I zoom out a little bit more, you can see over here how I was investing every single month, and then my last transaction was in March 2023. It's just pretty crazy to see this chart. Of course, I was still investing, I was just in Australia, which is why the green dots have gone. I'm gonna come to my Australian account in a second, but it's just crazy seeing that chart, and the global stock market does just go up and to the right over the long term, even though there are dips, crashes, corrections along the way. And everyone's asking me, is there going to be a crash? The thing is, there will be a crash. There 100% will be a crash, but No one knows when it's going to happen, how big it's going to be, or how long it will last. And unfortunately, that is the same with every single dip, crash, correction. No one has any idea. Looking back, it's so easy, but forward looking, it's so hard to predict, which is why I simply don't try to time or predict it. I just invest consistently and let the market and time do the rest for me. If I come to performance and go all the way back, it actually looks like I did start in this account in January 2019, and that was because I incorrectly used a general investment account at the start. Long story, I didn't know what I was doing back in 2017 or 2018, but you can see once again how slowly and steadily it has gone up over time, and I've been given some pretty good gains from a simple global index fund. The reason why I like the FTSE Global All Cap specifically is because it is the most diversified global index fund available to us as UK investors, because it includes all company sizes. Most global ETFs that people commonly use only include large and medium-sized companies, whereas the FTSE Global All Cap also includes small-sized companies. Now, saying that, the returns are very similar to a FTSE All World or an MSCI ACWI index, but still, I just like that extra diversification, and because that fund isn't available on many platforms, but it is on Vanguard, that's why I've always used it. And just to show you what I mean, if I very quickly go all the way through to, let's say, April 2023 onwards, where I made my last contribution, or let's just say the 1st of May, for example, you will see, oh, so on this, I think this is my fees when it says you contributed and withdrew. I don't actually know what that is because I didn't make any contributions, but you can see over the last sort of 3 or so years, 3 and a bit years where I've not invested a penny, how the returns have just been insane. And that, I guess, 2 things to point out from that is just the power of staying invested. I didn't really check this at all. But secondly, once you do have a good level, a good base, so I started with £37,000, you can see, and that was before I moved to Australia and moved abroad, you can see how having that good foundation, when there are good years in the market or good multiple years, it just gives you so much money in your pocket through capital gains. I had a bit of a voice crack there, but you know what I was saying. And another thing to point out, but with this sort of gain number and a percentage, it is so volatile. It changes so much on a daily basis. And it's only when you zoom out, you start to see the bigger picture and it's more impactful, which is why if you have just started investing, you actually just need to ignore the gain. Just say you're using a global index fund or ETF, just focus on getting as much money in as you can every single month whilst enjoying your life as well, of course. You've got to balance living and investing and saving. But get invested as much as you can each month and ignore that return percentage or number because it will fluctuate like mad from month to month. Just to show you quickly, that general account, this is my general account. So there was never very much in there. I ended up making a loss. It is the one stain on my Vanguard UK portfolio. It was just a mistake on my end, and luckily I very quickly switched to a stocks and shares ISA, although it is a bit annoying that I technically lost money. The most important point on my stocks and shares ISA is that I'm actually going to be using a new stocks and shares ISA now that I'm back, and I'll be announcing that in a video coming very soon, but it'll be a different platform and a different investment. Feel free to make a prediction down in the comments below on what platform you think it's going to be. The other account I have with Vanguard UK, and this is still active, is my SIP. So all of this money, once again, unsurprisingly, is in the FTSE Global All Cap. This one, the gains are smaller. I opened this in May 2022. I essentially originally used it to consolidate old pension pots. So I have 2 old workplace pension pots in here from Legal & General and Standard Life. And I made sure before moving that money, I wasn't losing any perks or benefits from those old workplace pensions. So always do that before moving any type of pension money. But yeah, this started in May 2022. It was originally to consolidate old workplace pensions. And then essentially now that I'm working for myself through a limited company, I continue to make SIP contributions from my limited company into this account. And of course, yeah, all the money once again goes straight into the FTSE Global All Cap for the exact same reasons as why I use it in my stocks and shares ISA. So in total, this account is £110,000, which is well over half of my total investment portfolio. The next account is my Vanguard Australia account you can now see on screen. With this one, I'm actually currently in the process of bed and ISA in the money from Australia to the UK to get it in an ISA. But I'm doing it across 2 tax years. So I should have really recorded this yesterday. Yesterday, at the end of the month, 30th of June, this was £104,000 and I had 390 units, of VGS, as I'll show you in a second. But I sold half of it and I'm now in the process of moving the money back to the UK so I can get it into an ISA. And essentially on that sale, because I have made gains, there will be capital gains tax that is due. And I'll also make a full video on that, going through the process, how I worked it out, dealing with my accountant, the bed and dicer process essentially, so that'll be coming soon as well. With this though, I've got 2 accounts. So my super, which is essentially my workplace pension, that was originally with a company called Mercer, but when I left that job before moving back, I consolidated it into my Vanguard account. That is 100% in an international shares fund. Secondly, and probably more interesting, is this individual account. This is my Australia general investment account. Unfortunately, there is no stocks and shares ISA equivalent in Australia, so I had to choose a general account, and this was essentially a way that I was able to invest more of my monthly salary whilst I was working as a chartered accountant in Australia each month. On the Vanguard Australia website, you can actually, it looks a bit cleaner, but it's actually even less functionality than the Vanguard UK website. But if I go into my portfolio, you'll see that I have 1 global ETF. I essentially wanted an account with Vanguard Australia, looked through the fund list, and that was the most global fund I could find. So I put all my money in that, and I have 1 fund in this account. If I actually click into it, I think it will show you a bit more information. So the fee is 0.18%. It tracks the MSCI International Shares ETF. It actually doesn't include Australian stocks, but I wasn't too fussed about that because Australian stocks only make up about 2% of the global stock market. If you are in Australia or moving to Australia, platforms like Stake, Perla and Superhero, which I all have accounts with, definitely have better and more ETF options, and actually probably better global fund options. So looking back, I probably should have used one of those, but I got started with this account, this GIA, in April, May 2023, and because I had it open, I sort of just stuck with it. But I think looking back now, I probably would have just gone with one of those because of the better range of ETFs. And just going back to that portfolio screen once again, or the home, sorry, as you can see, I've had some pretty good gains. So this has been 3 years in the making. That was 60K. So I had about 61K in there. And my gains of all time are 15,000 dingo dollars. So about £7,500. And that is over the last 3 years. So even though there was the tariff dip last year, the Iran war, US war dip this year, still once again, even over a relatively short 3-year period, there's been some good gains. And it, of course, most importantly, far be having it under the mattress or having it in a savings account, is absolutely smashed both of those. One more quick note on this though, if you are gonna move abroad, or maybe your children are, or grandchildren, I think that don't put as much pressure on yourself to invest as much. Definitely, I would say prioritize spending your money on having fun, doing trips, memories, experiences, particularly if you're only going to be in that country for a couple of years. Of course, if you can invest a little bit per month, it's great, it will grow, it will hopefully compound like it has for me. But I definitely found some months I actually did pull back my investments if I was doing a trip, or I don't know, a weekend away somewhere in Australia. So it's definitely, once again, a balancing act between investing for the future and actually enjoying yourself. But I think particularly if you're only going to be somewhere for a year, 2 years, whatever it is, just actually maximize that sort of enjoyment factor, because of course, investing will always be there once you get back to the real world. Okay, so we're done on the laptop. Now onto the phone. I'll show you a few more accounts, and then we'll go into what I've been investing into so far in 2026. Okay, you're now in my phone, and you can see, before even typing anything, Monzo, Starling and Vanguard UK come up. Definitely too obsessed with looking at my numbers all the time. But the first one I want to show you is HL. So with Hargreaves Lansdown, who I think actually are probably the best provider, in my opinion, of course not financial advice, for a junior stocks and shares ISA, because they're completely fee free. But for me, I have my stocks and shares lifetime ISA with Hargreaves Lansdown. So with this account, I opened it in 2019, and I'd put £100 or £200 in a month, depending on the month. And I actually haven't made a single contribution to this since July 2021. The reason being was that was just before I became a higher rate taxpayer, and I ultimately just started focusing more on my pension because that was more tax advantageous, as well as my stocks and shares ISA because I valued that flexibility. But similar to my stocks and shares ISA, I've had this account open for years and years, and the gains are great, and it just shows the power of just staying invested and holding through all the noise. The next account to show you is my Trading 212 general investment account. I've had this open as well for years, since 2019. If I go to my portfolio, you can see all of my money is in the FTSE All World, a low-cost global ETF. And I've also got my 2026 experiment. So I had a full video on that, but I'm essentially comparing 5 different types of ETFs against the global one to see which one performed the best in 2026. I'm also going to be making an update video on that very soon. A lot of videos coming, as you can tell, so make sure you subscribe so you don't miss them. But overall, most of the money is in the Vanguard FTSE All World. If I now take you over to Freetrade, it's slightly more interesting. Although the first bit isn't more interesting because, once again, all my money essentially is in the Vanguard FTSE All World. And this Freetrade account I've had, I think, since 2018. I opened it up just before, or from memory, it was just before or around the time I also opened up my Trading 212 account. I have two individual stocks in here though. One is Tesla, which I think was a free share that I got years ago, and it's done well. And the second one is Diageo. And the reason being is that it's done terribly, as you can see, but I like to think that whenever I have a pint of Guinness, I'm, as I will be, as you're watching this, hopefully on my third pint by now. If I go to my activity here, you can see the last dividend was 4th of June, I got £1. So I like to think that I'm drinking Guinness at 1985 prices every time that I get that. Realistically, I should just sell those and put it all into VWRP, but they're the only two stocks I hold. It's a very small part of my portfolio, and I guess I just see it as a bit of fun, essentially, to be transparent. Now, I also have loads of investing accounts with other providers, Invest Engine, Lightyear, XTB, IG. I essentially make an account on every platform so I can give my honest opinion and talk about it. None of those are really that meaningful at the moment, although a couple of them will be growing soon, which is also coming. But all of the money on all of those accounts is also in various low-cost global ETFs. The more interesting point to talk about now, though, is my crypto.com account. So I invest a little into crypto. I've done that now since 2020, 50 or 60 pounds on average per month. And most of my money is in Bitcoin. And other than those two individual stocks, this is definitely the high risk element of my portfolio. When it comes to crypto though, most of my money, or most of my crypto I should say, is stored offline on a Ledger Nano X offline wallet. If I scroll down to crypto.com, you can see I've got essentially 3 cryptocurrencies in my account. The largest one is Bitcoin, and to be completely transparent, Bitcoin is the only crypto I currently actively invest in. CRO, I have a small investment because I have one of their prepaid cards and you have to stake money. I've done that back in 2020 and I've just kept it staked for some of the perks that come with it, including priority pass lounge access, which did me pretty well when I was going back and forth from England to Australia, and I still have that. The next is Ethereum, and I used to split my monthly contributions half and half into Bitcoin and Ethereum, but since this year, I'm solely now just focused on Bitcoin. I'm happy to talk about crypto in a full video, that would be helpful. The FCA do recommend you should have a maximum of 10% of your money, or net assets they call it, in high risk investments like cryptocurrency. I have about 8% at the moment, so I guess I'm in line with that. But to be transparent, my crypto portfolio has been as high as 20% in the past when Bitcoin and crypto has boomed. So I would say for me right now, at the stage I'm at, most of my money gets funneled into global funds, as I'll show you, but probably anything between 5 and 15% I'd be comfortable with. Although yeah, another point, Bitcoin is doing very badly this year and my messages are at an all-time low. Normally when crypto's at an all-time high, I get so many messages on Instagram. Right now I'm getting none. So it might be a good time to buy. I don't know. Of course, like anything, you can't time it. I'm still just investing little and often, as I have done for a number of years. And that really is the main accounts that I actually use and all of the main investments that I actually make. I think just to flash it back up on screen again, this here is my portfolio breakdown by type of investment. So you really can see that I'm weighted massively towards those global index funds. And I actually think this chart is also helpful, which sort of shows I'm in thirds. I wish it was 50-50, split between ISAs and pensions, but just given that I have a bit in crypto, and given that I've been in Australia and was using a general account, I have a third in general investment account. So my plan really now is over the next 2 tax years to get that yellow bit down massively as I move all of my money from Australia and bed and ISA it into my brand new stocks and shares ISA. The last one I wanted to show you was this, which sort of shows how my money has been allocated so far in 2026, and it really is in line with, I guess, my actual overall portfolio allocation. Most of it has been funneled into global index funds and ETFs with a little bit of crypto, and all of that crypto for this year has gone into Bitcoin. To flash back up on screen the performance year to date, it just really shows the power of staying invested regardless of what's going on. Assuming you've got a long-term time horizon, you have an emergency fund, and your investments, your split of stocks, bonds, crypto, whatever asset classes you're invested into is set up in line with your preferences, your goals, your risk tolerance, then the best thing to do, regardless, I would say, of the asset class, just keep investing consistently and hold for the long term. This has been a very long video. I really appreciate if you've made it to the end. By now, I'm probably on my 4th or 5th pint of Guinness, but a massive thank you for watching. If you do need a hand with your investments, check the first link in the description because the investing Academy opens in just over a week and I'm absolutely buzzing. But yeah, any questions on the portfolio, on my investments, on anything, please let me know. And if you want more information on exactly why I use global funds, because I've been banging on about them a lot in this video, then click the video on screen next and I go through exactly why I invest in this way. Thanks for watching, really appreciate it, and have a great day.